you hear me? I don't know if anybody's gonna come through. Can you hear me? All right, cool. So I guess Tattooed Chef did end up dropping earnings. Let me tell you guys exactly what happened from my perspective. I saw about 1 to 2 million share dump on the market. So I went to Edgar to see what the filings were, and it was just the filings of a late report. So I took that down as they did report earnings, guys. And overall, the earnings report is okay. I wouldn't say it's great. So I do apologize. I saw the shares get dumped and just went to the filings, and so yeah, it was about a 1 to 2 million share dump before any news hit the market, and so that alerted me. Went to Edgar, and then saw the filing of them going to be late with the filings. But overall, guys, revenue was up 43%. Which is good. I'm just gonna go over the concerns that I have really quick. The main concern that I have is that gross profits are the profit margins are actually getting slimmer, and that is a concern of mine, guys. Profit margins getting smaller is definitely a concern. Obviously, they lowered guidance. Not by anything drastic, but negative EBITDA is worse. So while they're growing revenue, their margins are shrinking, and negative EBITDA is growing. We need to get them positive cash flow. Obviously, revenue of 162 versus the 108 is a nice increase year over year. Just taking a quick look. Net loss was $70 million compared to net income of $3.5 million in a year prior. Okay, so that's not pretty, guys. So they lost $70 million compared to the $3.5 million a year prior. Now I know they've had, purchases and things of that nature, so I get it. Adjusted EBITDA was negative 14.7 million, call it 15. Adjusted EBITDA negative 15 million versus 10 million a year prior. So that's another thing. We got to get them, positive cash flow, positive EBITDA. So yeah. Obviously, lowering outlook for a few reasons why this earnings report kind of caught people off guard is first, the two experts had them around 68 million of revenue, and obviously they came in below that. Still grew revenue pretty strong, I would say. But full year outlook revenue range of 210 to 215 is still an increase, but it's also a decline of what they originally projected. So overall, guys, not bad. I mean, I thought it could have been a little bit worse, to be honest with you. I think the quarterly report is good. I wouldn't say it's great, obviously, but I think it's good. Oh, Susan, hold on 1 second. Yeah, I don't know what those shares were. I think that's what you said, Susan, for the shares. I'm not sure what all the sales were on the shares, guys. You have to be a little concerned with, Tattooed Chefs usually has between 4 to 500,000. Well, between 4 to 700,000 shares traded on a daily basis. Sometimes it hits 1 million shares traded on a daily basis. When you have 6 million shares traded in a day, and most of it was selling prior to news coming out, that's a concern. I mean, obviously, you guys saw I dropped a video. The reason why I dropped the video was all the selling that was going on. From everything I can see, obviously guidance is lower. The biggest concern that I have, guys, is these margins. Okay, the gross margins at 10% is and getting smaller is that's not good. I'm looking at the shares right now. As you all know, one of the concerns that I had was going to be, are they dumping shares? And it looks like shares only increased about 50,000. So, definitely no concern there. But I don't know. Did they just dump shares today? Like, something happened, guys. There either a big investor exited or shares were put on the market. I, that's the only two things I can come up with because just to give you guys a heads up, I'm in the hotel room. I'm sitting here waiting. I'm waiting for them to put the quarterly report out, and then all of a sudden I see the stock tanking, right? And I see the massive amounts of shares hitting the market. So I go to see if any filings were happening, and the only filing, thank you, I appreciate it, man, thank you. But the only filings that happened were the delay filing for their quarterly report. So for me, I freaked out. Why is there so many millions of shares being dumped on the market? The stock goes from $17 intraday down to $15.40. Okay, that's a red flag, guys. So what did I do? I went right to the filings. I saw that the November 16th. I misread it. I took the video off. But the bottom line is, guys, that somebody dumped shares on the market and it was a pretty decent amount, okay? And I don't know if this is going to come back to be an insider trade because it seems like somebody had knowledge prior to this coming out. And it's not like the news is that bad, right? This is not a bad quarterly report. There's a few concerns I have, but it's not bad. I would give it a C. I would give it about a C grade quarterly report, right? They're growing revenue. That's not the problem, guys. That's never been the problem with Tattooed Chef, right? Them growing revenue is not the problem. The margins are the problem. So, I know they're vertically integrated. The margins should get better, but they're not, right? Because the cost of goods and services are going up as we speak. So I just don't know if those margins are going to get any better. I mean, what does it matter if you're growing revenue, but your margins are shrinking? You know what I mean? Like, I'm not trying to downplay the amount of revenue growth that they had. That's absolutely, why I'm interested in the stock is their revenue growth. But if their margins are coming down, that's a problem. And the EBITDA is, what's up, Simon? But EBITDA, is a problem here. You negative 14 million EBITDA. They gotta start positive cash flow in here, guys. I mean, we buy stocks for the future cash flow, right? They still have 129 million in cash, so strong cash outlook. Shouldn't be any issues with that. Um, and roughly 82 million shares outstanding. So nothing to be alarmed with on that. Overall, guys, I don't think it's a bad quarterly report. Once again, I'm just going to say that, I think the margins are a problem. And once again, guys, I apologize for dropping a video that wasn't my intentions to make any clickbait. Like I said, guys, I saw a lot of shares being dumped, freaked me out because I'm protecting you guys as investors. So when I see a bunch of shares being dumped, I'm trying to get you guys the information as soon as I possibly can. I go to the Edgar website to see what the latest filing was. The latest filing on Tattooed Chef is that they're not reporting quarterly reports. So I make a video on them dumping, not them dumping shares, but somebody exiting, right? Somebody exited a big position here, okay? A few million shares was exited, okay? And I wanted to create content to let you guys know, hey, something's going on. Went to the filings. Doesn't look like they're filing anything. They ended up filing. Nothing bad with the quarterly report overall. If you guys, hey, what's up, mailman? Vegas is good, man. I'm still trying to get on the sleep schedule here, but I'm still on the East Coast time. But yeah, guys. Overall, the one thing I would say keep an eye on going forward is going to be, watch out for the shares, man. It's, I just something's fishy. Okay, something's fishy with that. I mean, as always, guys, I just give it to you straight. I didn't like the dump that happened today before news came out. I don't know. That's a little fishy, guys. So what? Let's see what the stock is trading at currently right now. So let's go take a look. Stock price. Yeah, so it's down after hours a little bit, but it's not bad, guys. This is, you know, we need to hold, if you're a long-term holder from a technical standpoint, guys, I would say you really need to hold that $15 1543 mark, okay? That is that's a big, we broke below that 1543 intraday today from the sale that happened. Literally, guys, the stock went from $17 all the way down to 1540, okay? That is not cool, right? And then now we're about 15.96. So, we'll probably hold strong around $16. So nothing too alarming there from a technical standpoint. You just want to hold that 1540 mark, okay? That's definitely a mark you guys want to keep in mind. We break that, like I said in the video, if we break that, guys, you definitely want to watch out because the shorts will just be eating this up. It's because it's still a fairly low float. So, that's manipulation either direction on lower floats. So when you guys have lower float stocks, meaning that there's not that many on the market, you're going to get manipulation either direction. So whether it's going up or down, you'll get manipulation. But overall, guys, I'm not seeing anything. I'm not seeing anything great about the quarterly report. I think it's everything that we have expected. Margins, slim margins, man, they're coming down even more. I think the net margins came down about 0.5%. That's something I would keep an eye on. Cash position still strong in the company with $129 million. Negative EBITDA of 14 million versus positive 10 last year. Not too happy about that. But overall, I didn't listen to the share call, but as a stockholder, guys, this is basically one of the things I want to talk about. Okay, September 30th, 2021, there were 70 million shares outstanding. Okay, as of September 30 of this year, there's 81 million. Okay, so that's the 10 million I keep talking about. All right, just to give you guys a heads up. We don't want to see that grow anymore. So overall, guys, growing revenue, okay, which is better than Beyond Meat can say right now. Growing revenue, and I would just say the margins, and we need to get them positive EBITDA. The other thing we want to keep an eye out is going to be they need to acquire another facility. Okay, they're still going to need to acquire another facility, and how they do that is another thing that we want to keep an eye on as investors. So does anybody have any questions or anything? Just shoot it out or whatever. I'll try to catch it. But all right. Well, guys, I apologize for the video. Hey, what's going on? You changed your name. What's up with that? So yeah, overall, guys, give me a thumbs up if you thought give me a thumbs up or a thumbs down on how you felt the quarterly report was through the messenger. Yeah. Yeah, I agree. So overall, would you say 50-50 or 35 good, 65 bad? I would say, okay, so just, yeah. So I'm still going to call you Maya, by the way. I'm just taking a quick look at it right now, Maya and Susan. I would say, yeah, I would say it's a 50-50, okay? I would probably lean more towards, especially where the price point is on Tattooed Chef right now, is I would actually say it's kind of the upsides. I'm going to wait to see what the market does tomorrow. Okay, so I'm not going to say anything right now. I'm going to say let's see what the market does tomorrow. Okay, and from that standpoint, I would let it, if it's bleeding, if it's going down, I'd let it do its thing for a day or two. Don't try to catch a falling knife, as they say. And I would just say that if you can get in once it levels out, I think you're buying. I think you're buying pretty good right now. The price is obviously, the stock is beaten up from a technical standpoint. overall, they're still growing revenue. There's nothing too alarming on the there's no share delusion. There's nothing alarming that should cause you to be concerned. Obviously, we want to see margins grow. We want to make sure that they're not going to dump any more shares on the market. So overall, I would say, about a C, a C plus. I think, I think Wall Street, the reason why we see this stock tank on earnings is that they don't have anybody covering the stock right. They were expecting much higher guidance, and it didn't come through. And, no big deal, guys. So overall, I think it's a pretty solid earnings, better than I thought it was going to be. I'll admit this. Guys, I knew the price was going to come down. This earnings is not bad, better than I thought it was going to be. Margins are scary, okay? Gonna keep it straightforward. Margins are a little scary. And, we want to see them positive EBITDA. So, I mean, the next step, okay? The next step for Tattooed Chef is going to be how they acquire their next facility, okay? And now that they're going into the plant-based snacks and tortillas, as Maya, if you're still on here, you know how I feel about that. I think that's where the margins are going to grow. Personally, I think I think them getting into the frozen foods was kind of just the foot in the door. So they're taking a hit on the margins, but I do think the margins should be better for the plant-based snacks and plant-based tortillas, and that's where we should see a kick up in the positive EBITDA and better cash flow for the company. Other than that, guys, 129 million in cash, nothing wrong with that. Growing revenue, margins shrinking, little concerning. But guys, hey, I will tell you when I am wrong, and this was a better report than I was expecting. Okay, not sure what the market thinks of it, but yeah, it's bouncing back. Yeah, guys, this is bouncing back to $16. So I mean, this is a good report. They didn't blow the doors off of anything, but this is a good. Yeah, I don't know. I don't know. A lot of YouTubers are pumping the stock. I'm not sure why. I mean, I think a fair market cap for this company is, though, 1.3 to 1.8 billion, maybe 2 billion tops. You could give this company, in my opinion, you could give this company a $2 billion market cap if the margins were better, right? Like, we're not talking about a tech company that's growing revenue at 75% and has great margins. So, me personally, I would be comfortable spending a $2 billion market cap for Tattooed Chef if it were, if the margins were better on the company. Okay. So I think where it's sitting right now with the market cap of about 1.3 to 1.8, I think that's about right. I mean, I appreciate it, man. Thank you. Yeah, I mean, that is what I feel. And I mean, the market's starting to pick it back up again, too. So, I think today somebody exited a large position, caused me to be concerned, get it out to you guys. And obviously that was a little premature, but they did drop the earnings, which is good. That's, you want to see them being responsible. They dropped the earnings. The earnings are good. Markets, I think the market's acting appropriate to the earnings right now. So, that's just my opinion, guys. Market is absolutely acting appropriate to the earnings. It's back up to $16.30. Yeah, it's a good earnings report. Nothing to be ashamed of. Like I said, the only concern I would have is going to be the margins, guys. So, somebody exited. I guess maybe somebody thought, see you later, Maya. Somebody exited, and I guess they exited at the wrong time. When you look at it, this is a pretty good earnings report. Could it be the dumping? Could be the company dumping? I really don't know. We won't know unless if any filings or the next quarterly report comes out. So overall, guys, I think it's a C plus earnings report. Yeah, I think better than I thought it was going to be for sure. Okay. Yeah, I think so. Yeah, we got to see these margins grow. You know, we got to see these margins grow. Um, I don't think they can raise prices. I don't think they can raise prices, to be honest. I think they're already fairly expensive, fairly priced. You know, they're kind of in the upper. I mean, you're spending almost $5 for a meal, so I don't think there's room for them to raise costs in the price. I know it's vertically integrated, and as time goes, the margin should be growing. But guess what, guys? That is not what's showing in the report, okay? Margins are shrinking. Why do I think margins are shrinking? I honestly think the problem is they have too many products, okay? I think I would rather them have 25, 30 products where, you know, a lot of them are home run hitters rather than have 100 products and 5 are home run hitters, but they're still incurring the cost to push 100 products out there. Yeah, okay. So two questions there. So with the SPAC, okay. So with the SPAC and the shares, um, they have the rights to issue more shares. That was one of the filings we went over. And so they did file for more rights to sell as insiders and as institutions. You know, so they do have the right to put shares on the market, guys. Okay, that's the risk you're taking, whether it's a SPAC or it's not a SPAC. Yeah, and I agree that $5 for one vegan meal is yeah, I something could guys, I agree. I agree. I think, you know, something was fishy with today's action. I don't know if there'll be an investigation. You know, that's separate from you know, what I'm reading on the quarterly report. The quarterly report was good. The share dumping today, guys, was didn't make much sense. Okay, so you talk about a company that usually trades about 700,000 to maybe a million. Okay, now recently it's been trading higher. Okay, but I've been watching Tattooed Chef for a long time. 700,000 is usually where it's traded. 700,000 shares. All of a sudden you get a 2 million, 3 million share sell. Okay, and we end the day with over 6 million shares traded, and then the quarterly report drops, and it's lower than expectation. Little fishy there, wouldn't you say, guys? I mean, I'm keeping that separate from the quarterly report. The quarterly report was still pretty good. Does anybody know how much they need to delete shares to fund? That's still pending. Uh, that is a good question. They didn't say exactly what the split was going to be on shares and equity, or shares and cash. So yeah, that's a good point. I'm not really sure what the you know, what that entails, and they're going to have to do that a few times over because you know, I believe they need one more larger facility to start reaching that $1 billion in revenue. But as we see here, guys, why do we think the price is coming down? Or why do we think the price came down? Good earnings report. Okay, this is a good earnings report. I'm not taking anything away from this earnings report. But why do we think price came down? Yep, they still need cash to stay afloat, right? So that's one problem. They still need cash to run their business. And how are they going to get cash? There's only a few ways they can get cash. They either grow their margins or they put shares on the market, right? It's like, you know, they either grow their margins or put shares on the market, because the recipe that they have right now is a little concerning, right? As sales are growing, the margins are shrinking, so the net is like becoming worse. Yeah, no, no, that's because the reason why the price is not down drastically is because this is a good earnings report overall. I, you know, I think they're gonna do. I think they did have the earnings call. I didn't listen in because I want to get out on here for you guys. Because I did make a mistake by, you know, putting that video out there. So I want to get on here for you guys really quick. But opportunities out there. Oh, it's a good question. In my opinion, in my opinion, TTCF, yeah, no, I didn't follow the call either. I don't think there's much they really need to say. I think we know when you follow a company like this, I think unless if they drop something crazy, I pretty much follow it to the T. We know that they have the acquisition. We know they're going in plant-based snacks and plant-based tortillas. That'll be probably rolling out January. So we all know this stuff. So I don't really think I need a phone call for that. I'm more interested in reading the numbers and not getting emotional about the phone call. And with the numbers, somebody asked me, do I feel that Tattooed Chef's a good opportunity or is there better opportunities out there? And personally, guys, personally, I think you're getting them at an okay deal. I don't think it's a great deal. So in my opinion, I do think there are better opportunities out there. I do. You have to dig a little bit deeper in such a rich market. Um, yeah, no, we need more details on the acquisition. I agree because yeah, this is a good guys. This is a good quarterly report. Margin's a little scary. Yeah, all right, Vanessa, you're getting out of the stock. Well, I don't blame you. Um, I think yeah, it's tough. Okay, it's tough. I think the margins scare me, guys. I think the margins scare me. You're talking about gross margins of it says gross margins of 10.1, but like what's net margin on these things? Like 2? Like it's there's no room for error. Um, that bothers me. Cost of goods are going up. Inflation's absolutely taking place. So long term, that bothers me. Um, yeah, I mean, maybe we get another dip. Maybe I don't know. I think this quarterly report kind of saved their butts a little bit. They grew revenue. Yeah, tomorrow morning. I mean, what you might get a violent move in the morning. You might get that violent move in the morning, and then you know, you either hop on it then or um, you know what? With the fuel cost, you might have a point. You might have a point, guys. That's a great point. We don't really think about that. They're growing when we think about where their farm is. Yeah, that's the way to do it. When we think about where their farm is they're in Italy, right? So they have to ship everything over, guys. The gas is expensive, okay? Labor costs is expensive. So that could be why we see the percentages coming down on their margins is because of the fuel cost and shipping things over from Italy and because of labor costs going up. That margins are shrinking. And guess what, guys? That's just started because it's going to get worse, right? Because if we think about it, um, literally gas prices just started like skyrocketing over the last few months. So if this sustains throughout the end of the year, I gotta believe they have no. When you're doing 50, okay, when you're doing 56 million or revenue, whatever, what was it, 58 for the quarter? When you do 58.8 million in revenue, right? And your negative EBITDA grows by 10 million. Okay, so let's think about this really quick. Okay, this is why it's important to run an efficient business. All right, revenue was almost 60 million versus 40 million. So let's just call it 20 million for easy numbers. Okay, 20 million for easy numbers, right? Revenue was. The problem is their negative EBITDA, it went from positive 10 million, right, to negative 14.7 million. That's not good. That's a red flag, in my opinion. Okay. Now I'm chalking it up to them growing, and I'm chalking it up to them growing in acquisitions and stuff like that. Like, I think the finances will eventually work themselves out. But when you grow revenue that much, but your negative EBITDA is like it goes from positive to positive 10 million to negative 14. That's not efficient, guys. That is not efficient. So, that's things that you're probably not going to hear on other channels. I think everybody's so focused on the top line. Everybody's so focused on, yeah, I mean, hey, Paige, everybody's so focused on the top line revenue growth, which is, listen, guys, it's extremely impressive, okay? It's extremely impressive. But here's the thing. If I tell you I bench press 500 pounds, that's impressive. But what I didn't tell you is I weigh 800 pounds, so I'm not even benching my body weight, okay? That is what this is, okay? Like, the numbers are impressive, but they're not pulling their weight really. Yeah, exactly. Like, anybody can grow their revenue if they're willing to spend. Now, the one thing I will say is if they can get in the plant-based snacks and plant-based tortillas and the margins are good, I think you got something special. I will say that. I don't think it's a special company right now, right? Yeah. I don't think it's a special company right now. I think once they get those products out there and the margins are growing, then I think you got something. If they can sustain revenue growth with margin growth, then it's a $2 billion, $3 billion. As of today, guys, if the margins were better in this company and they were closer to positive EBITDA, like even if they squeaked out positive EBITDA, it's a $2 billion company. Easy. And how do I get that? I usually go off of their projected annual revenue, okay? So projected annual revenue is going to be, it's down 5 million, no big deal. But still it's over, they're projecting over 200 million in revenue. I can totally agree with giving them a $2 billion valuation with how fast they're growing revenue. But what I can't do, guys, is I can't look at, wow, they're growing revenue at $58 million, but then I go down to negative EBITDA, and negative EBITDAs went from positive 10 million. They were positive adjusted growth, positive 10 million versus negative almost 15. That's not good. Like, that is not good. So once again, guys, I'm chalking that up to just them acquiring and spending. But the thing that scares me is the damn margins, man. I don't think it's going to get any better. I don't think it's going to. Right. Yeah. I mean, you don't want to just rely on only revenue. You want an efficient business model, and I think they will get there. But think, right? Paige, you said it earlier. Like, you can't think, right? Thinking will get you in trouble, and feelings will get you in trouble too, right? I feel like it's a good company, but then when I really look at, okay, they grew revenue, right? But the margins shrunk, and EBITDA is awful. That's why I give it a C+. Okay? I can't give it any better than that. I mean, you want to give it better than that? Okay. I would have been happier. Yeah, it is. I mean, I would have been happier with them having a bigger miss on revenue. But if I saw margin growth go from 10 point, what are they at? 10.7 or something, gross margins, to go to like 11 or 11.5, and you got positive EBITDA, I'm all in. Guys, I would, if they missed revenue by a little bit more than they just did, but they had positive EBITDA, and they showed me that their vertical. What do we always talk about Ttcf? It's the vertical integration. They're going to have great margins. Well, if they would have showed me the margins were growing, because that's something that they've been selling people on, like, that's something that we all are buying into, is that they have a vertical integration and margins are going to get better, right? But margins are not getting better and EBITDA is getting worse. I can't seem to justify it. So that's just my opinion, guys. As always, man, I just try to be as honest as I possibly can. I don't think it's a sell the house earnings because of margins and, it's still negative growth. They're burning cash still, okay? Like, you have to remember that they are burning cash. Thank you. Yeah, I appreciate that. I try. I don't, it's hard. Sometimes we get emotional, listen, guys, I was a huge bull on this stock. Okay, huge bull on this stock. Like, you go look at my videos, like, what, 8 months ago? 8 months ago, huge bull on the stock, right? What happened? What changed my mind? Guys, I read the 10 Qs, okay? What changed my mind was I feel like Sam was being irresponsible with compensation on shares, okay? He's given everybody shares, right? I feel like some of the financial moves that they made, I didn't really like. Um, and then they put 10 million shares on us, the investors, okay? I didn't like any of that. Those things made me go from a bull to neutral. And I'm still neutral, guys. I'm looking at this quarterly report and it's complete neutral, okay? C plus quarterly report, right? Yeah, I think everything is priced in. I think if I'm gonna guess on what happens in market open, I think you get a little dip in the morning. I think you get people that want to get out on the dip, maybe got scared with the action that happened today. Okay. Um, and then I think, it'll probably find a base right around it. Maybe it reapproaches that 1540 mark again. But I think it'll find a base around there. And I think you're good. This is not a bad quarterly report. Like, I think it's what we all expected. Um, like I said, guys, the reason why I'm neutral on Tattooed Chef is yes, they're growing their revenue. I can't listen, guys. I cannot take anything away from them growing revenue. What I can take away is that they sold us on vertical integration and margins growing, and margins are not growing, and negative EBITDA is horrible. Okay. Yeah, I mean, if it breaks, listen, if it from a technical standpoint, if it breaks 1540 mark, I would not be shocked. I would not be shocked if we see, 12, $13. And that could happen, guys. We don't know, you don't know what the market reaction is going to be, but just by looking at the numbers, my opinion doesn't change on the company. I'm still neutral. I'm a little bit more, I think there's a little bit more upside if you get in at the right price because of the plant-based snacks and tortillas. I think that'll grow their margins. And I think it should in turn grow their revenue as well because it's more products hitting the market. So I think those two things combined makes it interesting at the right price. To each their own on what the right price is. I think anything in the 1.3 billion dollar market cap is a fair price. Like I said, guys, this could be if this had better margins, this could be a $2 billion market cap, and we could be looking at what, a 22, $23 stock. But it's not. It's not. When you're burning cash to stay afloat, um, and not the burn rate just grew. Okay, that's the problem, guys. The burn rate just grew. Um, oh yeah, yeah, I agree. Intel is yeah, Intel. I think Intel. If you got Intel in the low 40, like the mid, what it hit 47 and change. If you bought Intel at 47 and change, reinvested dividends, I think it will outperform the market over the next 5 years. So I do like Intel going forward, and the reason why that is, guys, is um, I don't think I think we're gonna hold on. I'm gonna get to that real quick on the quarterly on the Q4. Back to Intel real quick. Intel, when we think about the supply demand for the next 10 years, okay, I don't care what friggin' company you have, whether it's AMD, Intel, any of them, any of the big chip makers. When you think about the supply demand necessary to keep up with technology, computers, and vehicles, how does Intel not become a huge moneymaker and is not undervalued right now? Like just off a sheer supply demand, okay? They have a good dividend, they have great cash flow, they grow their revenue, okay? So like yeah, you want to be smart or you don't want as much risk, then yeah, I think Intel will beat the S&P 500. I think Intel will beat the S&P 500 if you bought on the dip at 47. Okay, I think Intel will beat the S&P 500 over the next 5 years with dividends reinvested. Okay, that's what I feel about Intel. I think we could see Intel back at $75, $80 a share. I think they'll grow their dividend once that happens. And if you got in at 47, you know, let's just say you in 5 years you doubled your money with dividends reinvested, probably close to triple your money. Yeah, I'll take that over the S&P. But back to Tattooed Chef quarterly report. I think this is going to be, if I were to guess, and here's the problem, guys. It comes down to Sam. I'm just not so sure Sam makes the best decisions. That's just my opinion. But quarterly report, Q4. I think if Sam makes good decisions, if they don't dilute shares, and if they truly stick to them getting out on, you know, getting their products out for Q1 of next year, I think that this will be one of the worst quarters we see for a while. I think from, you know, going forward, I think we will see, and I'm saying I think a lot, but I believe that if they really roll out the plant-based snacks and the plant-based tortillas, and they have to do well, okay? Obviously, that's, you know, that's left for, you know, to each their own. But, you know, if they roll that out, I think that this might be one of the worst quarters we see for a little while. And that's why I would say if you're going to buy the dip, this might be your chance to do it. And I'm not saying bet the house on this company because they're burning cash. But if you were interested in investing in Tattooed Chef, I mean, you know, I knew the teens were coming, guys. Like, I mean, you can't burn this kind of cash and, you know, have these low margins. It's a recipe for disaster. So, guys, I really appreciate you spending your day with me. You know, that's just my quick dive into just kind of doing a surface check on the company. And yeah, overall, I think it is a confusing moment. Yeah, it is. I mean, do they keep revenue growth where it is? You know, do they have a here's the problem. Do they have, yeah, right? Do they have a speed bump the way that Beyond Meat had, where they miss revenue, right? They miss revenue guidance and their margins are still slim. That is going to be ugly, okay? Let me just repeat that really quick, guys, okay? This is the concern, okay? Because it happened to be on me. Does Tattooed Chef have a bad quarter where they don't grow revenue, the margins still are shrinking, and they're burning cash? Keep that in mind, okay? Beyond Meat came screaming down recently, right? Screaming down. So could absolutely happen to Tattooed Chef. So that's, you know, that's something I would just keep in the back of your head, guys, you know? So as always, guys, I appreciate your time. Thank you so much for spending it with me, and appreciate the love and support, and we will see you next time, investors. Peace.